Welcome back to the channel, friends. Hope you're doing well. In today's video, I want to give you an honest take on my portfolio. Now, last video, I gave you my monthly portfolio update where I kind of show you, what I have in my portfolio. But today, I want to dive a bit deeper and kind of share, really my thoughts about each position and what I'm watching right now, because I'm planning to add maybe some other stocks as well to my portfolio, plus potentially where I might be shifting out of to use that money to invest into other places. So yeah, let's talk about it very transparently and hopefully you find it useful. So kicking things off with my overall portfolio right now, nicely developed over time. Not so long ago, it was significantly less. So the compounding definitely starting to kick in, which is great. Of course, mostly driven by the growth in Bitcoin, but even all my other investments, you can see here in terms of percentages, really grew nicely and hopefully continue to do just that as I continue to dollar cost average every single week. I've been recently also increasing my weekly contribution, which is of course a big part, right? One thing is the return in percentage you get from your investments, but also very importantly, to make sure you work on earning more so you can invest more, right? Because yeah, while a 50% return on $100 or 100 euros invested sounds great, in reality, the monetary value is still fairly small. So I think that's very important also to keep working on that. Now, of course, having said that, obviously, my biggest part of my overall net worth is of course tied up in my real estate, mostly right now in the UAE, 2 apartments over there, which really in terms of value increase has probably been my most lucrative investment. And even that, while I'm happy with this and they're rented out right now, paying me a nice monthly income. In fact, actually, most of them are paying an annual rent. So you get 1 check or 2 checks per year and have a big sum of money that you can then use to either, reinvest, or right now I can keep it in my bank in the UAE where I earn 6% interest on my dirhams, which is really quite attractive, obviously. So many different ways to deploy that capital. And even when I think about real estate, that's something for me where I really think quite often about what I'm going to do with it, because I think it almost starts to reach a ceiling where I could see the value, because I don't think a 1-bedroom in Dubai will go for 1 million, at least not the one I bought at, right? I mean, I already seen major increase in value. I just can't see it to continue doubling in price. There will be a certain ceiling. They're building all these new neighborhoods and so forth. So I think it's a question of time, but eventually I could really see myself selling out of that apartment. And then it's the question, of course, what do you do with it, right? We're all happy when we get gains from our investments, but then the next question is, once you're out of one, where do you deploy that capital? But most likely I would be selling it whenever we decide where we're going to buy our next big house. Right now, I'm in Lithuania, where we bought an apartment, really happy with this. But obviously, if we were to fully move back to Europe one day or decide to go all in and only live in the UAE, we of course would ideally want to have a house. The family is growing. We're getting our first child next month, which I'm really looking forward to. So you need more space. And obviously, I would love to have a house eventually, like a little garden and so forth. So in the UAE, that is very, very expensive. If you want to have a nice place, right? I mean, we're talking about, over $1 million plus. Under $1 million, you don't really get a nice house as such, right? Especially with the space. So that would require quite a bit of capital. So for that, of course, I wouldn't want to sell all my stocks and ETFs and so forth, as you just saw. So in this case, I would be selling either one or probably both apartments and then use some of the capital as a down payment to buy a bigger place. So that would be one option. If that wasn't to happen, because we also have friends who say, my dream apartment or dream house is just too expensive to buy. We've seen such crazy price increases where the same place that cost $1 million 2-3 years ago could now go for $2 million, which is crazy. So I know quite a few people who ended up renting their own apartment while using the money and capital that they have to buy smaller units as real estate investments, flip them, gain some capital gains, and of course earn income in the form of rent from those apartments. So that's also a great way. So you don't own your own apartment, which is psychologically not that good, but financially it might actually be smarter rather than having to tie up so much money in a house where you just live. It doesn't really pay you as such, right? Yeah, there's pros and cons. I still haven't made up my mind, but could definitely see those apartments that I have right now to use them for one way or the other. But right now, I'm not considering to buy investment real estate more in addition to the ones I have already. Honestly, I would probably rather use that money in the future to deploy into the stock markets or crypto markets. I just like that liquid nature of it. When I can see my investments going up, hopefully more up than down, I can sell out of it. I can shift into another investment very easily. I don't have all these ancillary costs, right? With real estate, I have service charges. I have to pay a property management company to manage my investments. Then sometimes the apartment might be empty for a while. So there's so many hidden costs that I don't really have with investments that I have. Okay, maybe I pay a $1 fee to buy a stock, but that's it, right? And it's really liquid. It's easy to follow along. So I kind of like more investing into stocks and ETFs and crypto than real estate while at the same time, of course, I do understand that it diversifies me. I have it more balanced. I wouldn't want to go all in on stocks, right? Or all in on ETF. I like to still diversify. But of course, if I was to buy another big house for ourselves, that's still part of diversification. It just doesn't mean that I have to have 10 individual one-bedroom apartments or studio in the future. It's not really my dream. It used to be a few years ago where I really saw myself as a landlord of a couple of apartments. But I'm really getting less excited about it. As I said, there's so much fat, there's so many hidden fees, and it can really work out well if you're into this and all you do is real estate. It's amazing. I still believe it's an amazing investment asset class, but it's just not my favorite one at this stage. Right, so that's about real estate. Now coming to the other two pillars, I call it my 3-pillar strategy. That's real estate, crypto, and ETFs and stocks. I put them in the same basket. So in terms of crypto, obviously I'm a Bitcoin maximalist. I only have Bitcoin in my portfolio, as you can see over here, and that's really been growing nicely for me. My average cost price, as you can see, is around $60,000, more or less. I mean, again, it's a bit hard to track because I bought on many different exchanges. I got some paid in Bitcoin, some for free in staking. So it's a little bit tricky to really track your exact cost basis. But now I decided it to be $60,000, probably be slightly lower, but just to be conservative. So since then, almost up 100K, which is a nice growth, right? But at this stage, I'm neither buying nor selling. In terms of percentage, it's already a big part of my portfolio. So I wouldn't want this to be too big. And as it continues to grow, it will get even bigger, right? As it potentially outgrows my other investments, it might have an even higher weighting in my portfolio. So I just like to balance it off a little bit. If, of course, I see it dropping to below 80 or 70,000, I might top up a little bit. But right now, I'm not actively buying more of the Bitcoin. Even though long term, I'm really still bullish on it. I could easily see it going to 500,000, maybe even 1 million in the future, but I think it will still take a couple of years. Now it's more mature. I don't think we're going to see this crazy growth of 200% in a couple of months. I think those times are behind us, but that's also fine, right? It also means less volatility. It doesn't mean that today it's $118,000. It's highly unlikely that tomorrow it's going to go down to $40,000, right? That huge volatility and these major price swings, it's just a much more mature asset class, more money flowing into it. I think it's good for Bitcoin long term. Then, of course, we move to the ETFs, and that's always an investing class that I'm a big fan of. If you don't know what to invest in, of course, I cannot give you investment advice, but if you have no idea, I think you can't really go wrong with S&P 500. These are the 500 biggest companies in the US, and by default, many of them also in the world, because most of them are operating on a global scale. So here you're really well diversified across different sectors. Yes, they're all based in the US, but as I said, they do operate on a global basis. If Microsoft is doing well in China, in Europe, well, that will reflect on their revenues and as such on the share price. So you're really well diversified, and I like it. I haven't bought more into it recently because I did start adding individual shares. I'll come to this in a second. So obviously, we all have a limited funds. So yes, those funds that I do have, I could obviously split them up into 4 equal parts. But since my S&P 500 holding, you can see already, is so much larger than my individual shares, for now, I'm deploying most of my capital in those individual shares. And later on, I might top up more in the S&P 500. So my S&P 500 holding, I'm keeping. I'll be happy to top up more in the future once my shares will come up on the same level. Because long term, I will definitely want my S&P 500 holding and other ETFs to be the biggest part in the portfolio, followed by individual holdings. The same was true with NASDAQ 100. I added it a little bit later. So here you're a bit more concentrated. And these are basically the 100 biggest companies on the NASDAQ in the US, operating on the NASDAQ as such, much more tech heavy. And I like that because I really believe the future is more tech, more than anything else, consumer goods or financials or anything else. I think tech is here to stay, only going to get more with all AI and so forth, chips, what have you. Tech is the future. That's just what I believe in. And that's why I wanted to kind of double down a bit more on tech. It did outperform the S&P slightly in the past, but not significantly. And also keep in mind that the management fee that I pay for the ETF provider, in this case it's BlackRock, it's I think 0.3%, while the one I pay for S&P 500 is only 0.03%. So significantly less, and those fees do make a difference long term. I'm still happy with it, I'm holding on to it, but I could see a future where one day I might actually exit out of it and then deploy the capital into individual tech shares where I see even more potential. Because S&P 500 I really like that it's diversified and more conservative. But if I do individual bets, like I started recently with 2 individual shares, I might want to double down on it, right? So it's still something I'm thinking about it. I'm definitely not selling it right now, but I could see a scenario where one day I might exit the position and take the money to deploy, as I said, maybe half of it back into the S&P for slightly lower growth, but then the other half into some stocks we have really higher conviction in that might outgrow the S&P 500 significantly more. But again, that's still food for thought. For time being, I'm leaving it here. I'm letting it grow and compound. but I'm not actively adding any more to my position in the Nasdaq 100. And then we come to the latest additions. These are my individual shares, which are right now Amazon and Google. And funnily enough, I actually started off initially with some individual shares when I started investing, that I bought just some random companies that I kind of heard people say online, influencers on YouTube, on Instagram, where they talked about different companies you should be buying. And I thought, yeah, makes sense. Let's put some money in there. And guess what? Obviously, while some of them did turn out quite okay, a lot of them actually turned out to be not okay, quite on the contrary. And that wasn't the smartest idea. So now I really realized if you don't know anything, just use a low-cost index fund. But now I really learned while my individual shares are going to be a smaller position compared out of my old portfolio, right? I never want to have 80% of all my net worth tied up in individual shares. That will be too risky for me. But a smaller percentage, as I have right now, obviously it will continue to grow. Definitely less than 50% for sure will be in individual shares. But those companies that I do invest in, I really have conviction in. And I want to invest in strong companies, fundamentally strong companies that have a bright future and a roadmap ahead, and also a higher upside than a potential downside. Of course, those companies are already strong, established companies. So for them to double in value, it will take much longer than a smaller company. But at the same time, for them to lose half their value is also highly, highly unlikely, while a smaller company can lose much faster, even more than half of the company value, right? So much less volatility, which again, I do appreciate as a sort of more conservative investor. And that's why I added companies like Amazon and Google right now. Companies I really studied, I made separate videos about them. But once again, I like those companies that are market leaders in their field and they are diversified, right? Amazon, look at what they're doing. They start now really working on robotics. Now, Tesla is talking about all their robots and Opus One, but Amazon is quietly really starting to become a serious threat to Tesla and many other robot producers because they're really throwing crazy money into that and starting to automate more and more. They're now working on parcel delivery, completely automated by robots, by drones. Automate as much as possible. And imagine they have a huge, huge workforce. I think over 1 million people worldwide. Once they can start automating more and more of their repetitive jobs, working on dark warehouses where there basically no more employees, everything is done through robots and automated, that would save them so many expenses. And obviously their bottom line, the profits would skyrocket, and that would obviously translate into share price. They also have safe driving cars with Zoox that they're working on. It's a new project, hasn't really come to fruition yet. Great. They have Amazon cloud business, huge, huge business for them, right? They have advertising revenue through the Amazon platform. Forgot about Amazon itself, right? The global e-commerce behemoth. Yes, of course, they might be hit by tariffs here and there. But again, that's just one part of the overall business empire. Now they're working on the project Kuiper. I'm not sure I pronounced it correctly, but that's basically going to be a Starlink competitor where they're shooting all the satellites into space, and that will provide global internet for anyone around the world, basically. So really interesting as well. And I love how they keep on innovating their CapEx, how much they spend on those innovations and developments. It's crazy. Big money. AI, I forgot about to mention AI even, what they're investing in now, their partnership with Anthropic, who is behind Claude, their own AI in-house, Alexa device. I mean, so many business ventures, and I like that, right? The numbers are strong, and I'm really bullish on them long term. And I know my money is safe, right? Even if one of those endeavors is going down, well, they have so many other legs to stand on. The same with Google, right? Everybody was saying, well, Google is finished because search is down. And yeah, probably in 5 years, the search we use right now, the 10 blue links as they call it always, is going to disappear. But guess what? Google is not sleeping. They came up with Gemini, which is really getting better and better. And actually, if you start using it, really very good, I must say. Very impressive stuff from the AI team. The same with AI mode that they started rolling out in 3 different countries now, and more countries will join in the future, where instead of going just a search, you have now basically like ChatGPT inside of Google search. Then they have Waymo, a real competitor, and actually, I think a leader in the space right now, way ahead of Tesla Robotaxi in many ways. So that's strong as well. YouTube alone, I mean, a behemoth company, more views than Netflix per month. Crazy. I mean, that alone could be a whole company, and I'm sure YouTube by itself could already be part of the S&P 500. Then we have Google Cloud, another huge business for them. So many avenues and businesses, once again, which I really like, right? I don't double down only on one specific field. For example, Netflix, which has done extremely well over the past, but here you're really betting on entertainment being the future. And for me, it's just a bit too risky because honestly, I don't know. Maybe in the future, everyone is just watching TikTok and people watch Netflix less and less. Because honestly, for me, it is the case. I watch more YouTube than I watch Netflix, for sure. So that's not something I would want to plow significant funds into it. And honestly, I also don't need to have 10 or 20 different individual companies. I'm quite happy having 2 or 3 individual shares. The rest will go into obviously ETFs and of course cryptocurrency and then real estate. So that for me still very much works. That 3-pillar strategy, I'm happy with it. I am at the moment looking at 2 other companies that I could potentially invest in. One of them is Oklo, really interesting company from the US. They kind of work on, modular nuclear reactors, basically small nuclear reactors that they can build across the country quite quickly and much cheaper than those huge nuclear reactors. And obviously, energy is the future with AI. The energy consumption is only going to go one way, and that's up. So we're going to need cheaper and more energy. So Oklo could be a potential competitor and leader in the space. And Sam Altman, the founder of OpenAI, is actually also a shareholder in the company. He probably knows a bit more about that field and sector and company. So that gives me also confidence. If I would have invested, you can see at the beginning of the year, up 254%, crazy numbers. But at the same time, why I haven't pulled the trigger just yet is because I don't 100% understand it, right? The same how I can talk to you about, hours about Amazon and Google business model. I really understand it and I love it and I'm behind it and I'm fully convinced. Here, I kind of understand the overall vision, but I have no real idea about the industry, the execution. Regulation is such a big question mark that's really out of my hand, right? Even if I was to understand the company, regulation is really beyond anyone's control, right? Except for the government. So there's so many question marks. So far, they have 0 revenues. So their first working reactor, I think, is planned for end of 27, if I'm not mistaken. So still a lot of question marks. Now, of course, at the same time, there's huge opportunity, right? That's how you make money. It's the same for the people who invested at Bitcoin when it was $500, $1,000, $2,000. It was very much risky, right? At the time, nobody knew anything about Bitcoin. So that's how you make a huge gain and return. But at the same time, obviously, I also want to conservatively invest. So I want to always invest into things I understand and where I see a big upside, but at the same time, also a very limited downside. While here, I could see the huge upside. If they do deliver on their promises, it could go crazy. But at the same time, if they don't, I might also lose all my money. And for me, it's just not worth at this stage. Again, I'll monitor it. I keep an eye, see what's happening with the company, listen to the earnings reports. But for now, I'm not going to invest into it. Another company that I'm also very, very excited about and would love to invest in is Robinhood. Now, they started basically as a stockbroker, like I always use myself, Trading212, eToro, Interactive Brokers. They started off in the US and they, I think, were one of the first stockbrokers that offered commission-free trading. And from there, they really grew. And honestly, when I listen to the company management, the CEO, the vision they have, the execution, unbelievable. And that really shows in their share price. You can see year to date, up 184% since the beginning of this year. Absolutely crazy numbers. And that's one of the reasons why I haven't invested yet, because for me, the gains were just too crazy the last few months. And I'm always behind. Now, when I saw it at $40, I always thought it was a little bit too expensive. Now we're already over $100. But at the same time, the market cap is only, as you can see here, $93 billion. Now, it is really high compared to some of the competitors. But if you compare it to some other companies like Tesla or Netflix, it's still a fraction, right? There we have companies over 1 trillion. So technically could still go 10x from here to reach 1 trillion. So that would be a price of $1,000 per share. And of course, a lot of things have to happen for the company to get there. But the way they're approaching, investing and really becoming the go-to app, all things money, from investing to stocks, ETFs, crypto. They're starting to become a bank now in many countries, rolling out globally. They recently entered Europe by being able to trade crypto completely commission-free. Well, Bitcoin, for example, really love that. UK as well, they're going to expand globally. They're innovating, basically allowing you to trade, again, stocks and ETFs through tokenization. I think that's going to be a first mover advantage. More and more people going to jump on that. So really cutting edge innovation. I really love the company. The way they're doing, I'm not using them myself as a stockbroker because obviously they're not available in the countries where I live. But just from seeing who's using it, young people who will eventually inherit the money from their parents, they will not be using those clunky, dusty old stockbrokers or banks that their parents have been using, but instead they will shift most of their money to apps like Robinhood, and that will obviously catapult the asset under management and therefore their stock price long term, right? So I'm really bullish on the company. I just find it a little bit too expensive for my taste. But at the same time, you could have said that about Bitcoin when I bought it at 70,000. That was also expensive. Yet since then, it almost increased by another $50,000, right? So the same could happen here. I wouldn't be surprised if eventually we see it over $200, doubling the money from now. So that's probably the closest one compared to the one I showed you before. Most likely would be my third share I'll be adding to my portfolio. But if I do, I'll definitely keep you updated. None of this is investment advice. These are just my personal thoughts and transparent review of my portfolio. And ultimately, it's your money and your investment choices. What is your portfolio doing? What are your winners and losers in your portfolio? Pop them down in the comments below. Happy to hear from you. Next up, check out this video over here. As always, thanks for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.